Imagine turning your 100,000 naira into 250,000 naira during a market boom, or even watching your few US blue chip shares grow into thousands of dollars. Which one gets you there faster? And which is safer? You see, let's break it down. Nigeria versus US stock market investing. So I just want us to do a little comparison here. So welcome to Money Mindset with Ima, where we teach you that money has a mindset. I'm a certified financial advisor with over 7 years of experience helping people build financial freedom. And whether you are in Lagos, Abuja, or anywhere in the world, knowing where to put your money matters. So let's explore the key differences, the risk, and also the reward, so you can make a smart decision. Number one to look out for is market size and liquidity. The US stock market is the largest and most liquid in the world. You see, you can easily buy and sell your stocks. You enjoy strong investor protection and also tight trading spread. On the other hand, the Nigerian market is a smaller and less liquid one, but has huge upside. The all-share index gain around, though with higher volatility. The number two, let's look at currency and macro risk. You see, the US stocks are traded in dollars, so that is a strong and stable global currency. But in Nigeria, your naira returns can be affected by inflation and exchange rate swings. So while investing locally can yield high profit, it also carries more macro and currency risk. Then number three, let's look at the growth versus stability. You see, the Nigerian stock market can be a roller coaster. Higher return one year, then deep corrections the next year. The US market, on the other hand, offers steady long-term growth. Historically, US equities have returned about 6 to 7% per year in real terms, backed by strong companies and also innovation. So if you want growth and can, stomach the risk, Nigeria has potential. But if you want stability and long-term compounding, then US market win. Then number four, let's look at regulation and also investor protection. US markets are very transparent and well regulated. Nigerian market is actually improving, but still faces governance and infrastructure gaps, meaning you must do more due diligence before you go into it. Then number five, diversification is key. See, it doesn't have to be one or the other. A smart strategy is mixing both US stocks for global stability and also Nigerian stock for local growth opportunities. So which should you invest in? If you're risk averse, go for US blue chips. If you're bold and also long-term focused, then include Nigerian stocks. So for most people, a blend of both gives the best of stability and growth. If you found this helpful, hit the like button, share this video, and subscribe for more practical tips. Now, tell me in the comments, are you leaning into US or Nigerian stocks, and why? I will reply to a few in my next video. Never you forget this, money has a mindset. So think smart, act wisely, and also grow your wealth. Thank you.